What will just 100 XRP be worth by the end of this bull run? We're going to talk about that in this video. Also, we have a lot to discuss with what's going on with the Bitcoin price chart, the crypto total market cap excluding Bitcoin and Ethereum. We're comparing it back to the past. We're also talking about a House bill in Pennsylvania that passed about Bitcoin. The rest of the crypto market, we're discussing what's happening with global liquidity compared to the stock market, how correlated it is to Bitcoin, what to be looking for over the next few months, and the reason why I'm more bullish than ever before as we look at some key indicators and some on-chain data to tell us what's going to happen next. On top of that, Brad Garlinghouse exposing Operation Choke Point 2.0, Gary Gensler not able to get it together as he twitches thinking about Donald Trump firing him, and overall what's expected to happen next on the XRP to the US dollar price chart in the short term. On top of that, what's taking place on First Ledger with these newer projects that are launching, going into the hundreds of thousands to $1 million market caps. I got a project for you guys to keep on your watch list underneath a $100,000 market cap that literally just launched about 3 hours ago that you're not going to want to miss. So comment 777 if you're feeling blessed, if you're feeling bullish, and if you're going to become the first millionaire in your family tree. Confirm it by tapping the subscribe button. Let's run it. All right, bull runners, welcome back to the channel. So over the past year, the crypto market's gone absolutely insane. What else has gone insane is these freaking hurricanes out here, man. Look at this. We got another hurricane, Patty, expected to make landfall on election day in Florida, November 4th through the 5th. So how big is Patty going to be? All the hairdressers are coming out now. You know, there was like a Trisha, a Tammy, and now a Patty or something like that right after Milton. So they're pissed that Milton didn't do the job, and they're coming to take everybody's land out here. But what's even crazier is the hurricane that's about to hit the crypto market because Pennsylvania passed a Bitcoin rights bill in the House, and this bill protects residents' rights to self-custody, ensures the ability to use Bitcoin as a payment, and provides explicit guidelines around taxing transactions. And this brings regulatory clarity to the 1.5 million Pennsylvania residents who own some form of cryptocurrency. So as we see more legislation like this come out, basically protecting Bitcoin and then the rest of the industry, and then Ripple working through their lawsuit and finishing up the appeal with the SEC, this is all just great news for the crypto market. We see mass institutional adoption with BlackRock, other institutions, and the market has been making a recovery since August of 2024 in this uptrend alongside Total 3, which is essentially all altcoins excluding Ethereum and Bitcoin because they obviously hold the largest market cap. So the main resistance that we need to clear is $650 billion for the altcoin market. Simultaneously, Bitcoin needs to clear and hold $70,000 as support before we really see the momentum come back into the industry. Because if we zoom out here, guys, the altcoin market is still well below the all-time high, whereas Bitcoin is hovering at the high that it was at back in November of 2021, and the altcoin market, $1.12 trillion, it's at $630 billion. And so the altcoin market is where more money is going to be made, in my opinion. It's 75% away from the all-time high. And if we just zoom out even more and we look at what happened back in the past on what needs to take place first, this is why we focus on Bitcoin at the start of most of these videos, because if you guys don't know what's going on with Bitcoin, then you won't know what's going on with your altcoins. Because look at what happened when Bitcoin broke out, and I'll just draw some vertical lines right here. When Bitcoin finally broke out past its all-time high, it was in December of 2020 when Bitcoin went from $19,000 really fast upwards of $40,000. It 2x relatively quick. If I were to just measure out how long this took, it was less than a month for it to 2x, whereas the altcoin market was struggling to break out during this exact same time period. The altcoin market was consolidating, between $115 billion, and it didn't even pass the all-time high until right here on February 21st, when Bitcoin was all the way up here at about $60,000. So if I were to just zoom in for you and show you how long it took for the altcoin market to break its all-time high last bull run, and when Bitcoin broke its all-time high was roughly December, going upwards of $40,000. The altcoin market lagged behind for a bit, and it took it about 56 days. Inevitably, it didn't really breach that much past it until it really started to break out about 98 days later. So let's just say 3 months before the altcoin market really started to make moves past the all-time high. And then by then, Bitcoin was already up here at $60,000. And then the altcoin market started to rally after that. So when Bitcoin reached the high in April to April 19th it was like April 12th to April 19th of 2021. The altcoin market had some juice left in it. And then of course, that big sell-off, wiped out a lot of profits for people that were buying all the way up here. And then that final double top, let's see when Bitcoin topped out right here. Bitcoin topped out at the exact same time the altcoin market topped out. So on this first peak for the altcoin market, it was after Bitcoin was in this downtrend right here on the sell-off. You can see Bitcoin had this complacency stage, last rally up, attempt to recovery on the 9th of May. And the altcoin market peaked out shortly after that by the middle of May while Bitcoin was heading down. It was roughly right around here, like 15th of May. And so Bitcoin was at like $48,000. And so what we'll see happen, most likely, again, this time could be different, but usually whenever we say that, it's usually the exact same. The altcoin market's going to lag behind Bitcoin. And when Bitcoin starts to break out and starts marching upward, well, that was a little too fast right there. I don't know if it's going to be that quick. Bitcoin starts to march upwards of $80,000, $90,000. We'll see the altcoin market break out with Bitcoin, but it'll be a little bit slower and a little bit more gradual, like what we saw happen through this phase right here, while Bitcoin goes more parabolic, faster. And then we see Bitcoin's dominance drop as the altcoin market starts to make that breakout. Because as you can see, by January of 2021, Bitcoin's dominance had topped out on the top of the screen, and the altcoin market was starting to break out and breach past the all-time high. And then when Bitcoin's market cap dominance was in a free fall from 60% to 40%, that's right here at the bottom of the screen where you guys can see altcoins forming this parabolic blow off top before that first, major dip that took place in the market, and then the double top all the way up here as Bitcoin's dominance was bobbling around and bottoming out down here. And so what I would expect to see as we go from orange to yellow and Bitcoin stock to flow rainbow indicator is similar to what we saw happen right here, this parabolic blow off top for Bitcoin's dominance as we breach to the upside to 60, 65%, blow off top, and then we see the breakdown for Bitcoin's dominance during yellow while the altcoin market then starts to make its breakout past the all-time high. This is what I would expect. And the reason why is because we saw the exact same thing happen last bull run, even the bull run prior to this. If we go all the way back here, we saw the exact same thing happen the bull run prior, where from orange to yellow, Bitcoin had this final rally and then it broke down in dominance while the altcoin market on the bottom of the screen that you can see right here from orange to yellow started breaking out. Then it cooled off between yellow and green, and then this final parabolic blow off top for the altcoin market in green. Now, very similar to the last bull run, we saw the same thing happen. If I go ahead and I clear the chart right here, from yellow to green, we cooled off right here, and then we have the blow off top, which in this case was a double top last bull run. So going from yellow, I believe there's a breakout, and then to green, we see the cool off period, and then we blow off top, and then we go into a bear market. Now, obviously, it's not going to look like this because I'm drawing with my mouse pad here, so it's not going to look exactly like this, but this plays out and this rhymes. Now, here's the reason why it rhymes from the past. Stanley Druckenmiller echoed this statement when he said, "Earnings don't move the overall market. It's the Federal Reserve Board. Focus on the central banks and focus on the movement of liquidity. Most people in the markets are looking for earnings and conventional measures. It's liquidity that moves markets." This is particularly evident when examining how closely the S&P 500 has tracked global liquidity post GFC. And you can see right here, it's a spitting image of it. So as global liquidity expands, the S&P 500 expands. When it retracts, the S&P 500 retracts. And the explanation for this chart right here boils down to simple supply and demand. If there's more money available to buy something in the globe, whether that's stocks, bonds, gold, or Bitcoin, the prices of these assets will generally rise. Since 2008, central banks have flooded the system with more fiat currency, and asset prices have responded accordingly. In other words, monetary inflation fuels asset price inflation. That's why I say at the end of every single video is the spending power of the dollar is going down in value. That's a fact based on inflation. It's because of global liquidity. Over a rolling 12-month period, Bitcoin has the highest average correlation with global liquidity, followed closely by gold. The stock indices had the next strongest correlation, and as expected, bond indices had the lowest correlation with liquidity. And so that's a good sign because why Bitcoin could be the purest liquidity barometer. Over the years, one asset that has exhibited the strongest correlation is obviously Bitcoin. As global liquidity expands, Bitcoin tends to thrive. Conversely, when liquidity contracts, Bitcoin tends to suffer. This dynamic has led some to refer to Bitcoin as the liquidity barometer. And so this chart clearly shows how Bitcoin's price tends to track change in global liquidity. And the orange is global M2 in the billions. The blue is Bitcoin's price right here. And right now, comparing the year-over-year percentage changes of Bitcoin in global liquidity, this also highlights how closely the two appear to move in tandem, with Bitcoin's price rising when liquidity increases and declining when liquidity falls. Given the chart that you can see right now, Bitcoin's price appears to be highly sensitive to changes in global M2. But is it the most sensitive asset in the market today? Generally speaking, risk assets are more correlated with liquidity conditions. In a pro-liquidity environment, investors tend to adopt a risk-on approach, shifting capital out of money from their bank account, out of bonds and all that stuff, into assets considered more high risk, high reward. So they start to get a little more degenerate, get more gambly, get excited about it. On the contrary, when liquidity tightens, investors get panicky, they start playing defense, and they typically shift capital towards assets they perceive as safer. So they dump crypto, they sell off stocks, and they move money into bonds and that type of stuff. And this explains why assets like stocks often perform well in rising liquidity environments alongside crypto. And the correlation during the bull run was pretty correlated between the stock market and the crypto market. However, stock prices are also influenced by other factors unrelated to liquidity instances. For example, partly driven by things like earnings, dividends, so their prices are also tied to the economy's performance. This can negatively impact how purely stocks correlate to global liquidity. So we're not going to get into too much of the other markets, but the question then becomes, how do you determine when Bitcoin is undervalued or overvalued to predict when supply will flood or be drained from the market based on liquidity and some other on-chain data? And so although the data set is still relatively small, the market value to realized value Z-score, which is the MVRVZ score, has proven to be a reliable tool for identifying when Bitcoin has reached extreme valuation levels. So the MVRVZ score is based on three components. That's market value, realized value, and Z-score. So I'm not going to get too much into the details for this, but what I want to do is I want to show you guys what this looks like when you look at the MVRVZ score. So there's three things that we're looking at here. The market value, or the black line, which is the current price of Bitcoin multiplied by the number of coins in circulation. This is like market cap in traditional markets. For example, like share prices multiplied by number of shares. Number two is the realized value, which is the blue line. Rather than taking the current price of Bitcoin, realized value takes the price of each Bitcoin when it was last moved. For example, the last time it was sent from one wallet to another. It then adds up all those individual prices and takes an average of them. It then multiplies that average price by the total number of coins in circulation. So that's the blue line that you're looking at. In doing so, it strips out the short-term market sentiment that we have within market value metric. It can therefore be seen as a more true long-term measure of Bitcoin's value, which market value moves above or below depending on the market sentiment at the time. And so the realized value is actually more important to look at. And then number three is the Z-score, or the orange line, a standard deviation test that pulls out the extremes in the data between market value and realized value. And then we look at this red box here on the top of the screen, which is like a layer on top that is used for the orange line. And then we have a green box at the bottom. So the red box at the top essentially means when the Z-score is overvalued, and then the green box is when it's undervalued. And so based on Bitcoin's realized value, not its actual current value. So the best time to get Bitcoin is when I was making videos all the way down here, showing you when the Z-score was all the way down within this green box. And I was saying that, watch guys, Bitcoin's going to go up and it's going to do very similar to what happened in the past. Now, we didn't know exactly what it was going to look like, whether it was more like 2019's rally, which is a lot more correlated to that with this recent pullback and how steep it was, that it was to the 2015 to 2017 rally. But nonetheless, history repeats itself and it generally rhymes. Every single bull run, we see the Z-score dip all the way down in this green box. It even dipped below it back in 2011. But right here, it hovered around this green zone down here, and then it started to break out. And then for the parabolic blow off top, for every single peak in the bull run, we were all the way up here in the 2017, 2018 top right here. We went above it, back here all the way back in 2013. We went above it, back here all the way back in 2011. We didn't go above it, but we wicked within it. Same thing right here for the last bull run. And by February 2021, we were up here. So this just tells you the best time to buy not only Bitcoin, but altcoins is when we're down here. Obviously, you missed that chance unless we wicked back down here again, like we did in March for that Black Swan event. It's possible. I don't know if it will happen or whatever. We can't prepare for that. But if it does, if you have money on the sidelines, it's best to just buy up a dip like that. But if we just continue to the upside, then going back into this red box up here is the best time to sell. Really simple, right? So this is why we track global liquidity for Bitcoin. And global liquidity is expected to top out for the end of this market middle to end of 2025. So there's still time. Also, a major reason why large investors are going to be funneling more money over to the crypto market is just because of the lack of the trust in the banks. Listen to what Brad Garlinghouse just said.
Choke point 2.0 is the crypto industry and individuals within the crypto industry are being debanked. I personally have been debanked. I got a call not that long ago from one of the major banking institutions I'd had an account with for 25 years, and they said, you have 5 days to move your money. Why? And they were actually super honest. They're like, look, you are a notable person in crypto, and having notable people with crypto and banking the crypto industry means more scrutiny from federal regulators. So we don't want it. Now, that's not legal. But it's also like, okay, fine. There's other banks that'll bank me. But imagine if you extrapolate that out and more banks. If I actually was cut off the banking system for the sole reason that I'm the CEO of Ripple, that is a hostile administration. And I think no matter what happens in this next election, we will have a reset. We can debate the magnitude of that reset, and there's lots of disagreement about that. Obviously, Trump came out early and very aggressively in a pro-crypto and said he's the crypto president. Kamala and Team Harris have been more nuanced. This week, I think it was this week, they had some of the most constructive things they have said publicly. But look, I do think, Kamala Harris is from Silicon Valley. I think she has generally been pro-technology over the years. She has been relatively quiet on the topic. But I think no matter what happens, we're going to see a reset. We're going to see forward progress, and I certainly am looking forward to that.
Now, the most exciting thing that is going to happen here soon is the departure of Gary Gensler, whether he leaves before he gets fired or he gets fired. The craziest thing is if Donald Trump gets elected, which the odds have actually increased for Trump getting elected unless the Democrats cheat or something crazy happens, well, then Gary Gensler is going to be gone, and he knows this. That's why he can barely hold it together with his twitchy hand here.
Talking of disclosures, one disclosure from former President Trump is that he would fire you, ultimately. Unsurprising to you, I'm sure.
So, Caroline, I'll let you go to your next question.
A lot to get on with, and your term is what, until June 2026? But will it run until then? Many feel that perhaps not.
So this brings me to the XRP to the US dollar price chart and the most likely scenario to happen in the short term. So in the short term, if we just look at the daily chart right here, we've been ranging between 67 cents, roughly right around this zone where we've wicked off of for resistance, and then between the support of roughly 50 cents right around here. And so XRP needs to hold this support. The challenge here is on the daily stochastic RSI, we confirmed a bearish cross well above 80, above 90 right here on October 20th, whereas XRP's price has been in a downtrend since the 29th of September. And so unless we see a breakout for XRP back up to this resistance and a turning around of the K line, the D line on the stochastic RSI, the likelihood in the short term is in favor of the bears for a break to the downside below this support right here to come all the way back down to 40 to 43 cents. Now, I know that's not what people want to hear, but I'm a realist. I'm an optimistic realist. I hope for the best, but also I'm not an idiot. I'm just going to look at what I see on the charts, and I'm going to tell you guys it as it is. If you can't control your emotions around that gets you frustrated. That's your own problem. Your parents didn't clearly teach you how to meditate. Neither did mine. So then you got to start meditating. You got to learn how to control your emotions, and then you got to deal with this downtrend in the short term. Now, it doesn't mean that this is going to happen. XRP could break out. We could turn back around. But like I said, on the daily, we are in a downtrend on the stochastic RSI. We confirmed a bearish cross above 80. Also right here on the weekly, we confirmed a bearish cross right here on the 30th of September. And so the K line's at 4, the D line's at 26. We're in a downtrend favoring the bears right now. So this would strengthen a midterm pullback as well too. For XRP, as we went from orange to yellow to break all the way down here, potentially wick off these previous levels like we saw right here, massive wick right here, massive wick right here, right here. It's hard to draw with this. Right here, massive wick. Right here, massive wick. And then overall, just massive support at this level right here. So this is roughly like 47 cents, 45, potentially all the way down to 38 cents is like worst case scenario down to these levels. This is where I would be buying more XRP and expecting a bounce from down here to then the upside as we would curve around on the weekly stochastic RSI, on the daily stochastic RSI, potentially form a bullish cross. That's what I'd be looking for to enter into more XRP. Now, while this happens and XRP just ranges sideways and tries to hold support, we see a lot of liquidity flowing into First Ledger. And so what I'll do is I'll leave a link in the description below to a Telegram trading bot that trades these XRP tokens. Now, this is a lot more for fun. Obviously, very volatile, not financial advice. I don't tell you to buy or sell anything. These videos are purely for educational, informational purposes only, because crypto is risky. You could definitely lose money in these markets, especially during periods like this where we don't see new money coming to the markets until Bitcoin breaks out. And so it's player versus player hard mode. But when a new platform like this launches, this just launched like a week ago, we're going to see a lot of liquidity flow into these projects. For example, like Drop. I bought Drop at like 100, 200K market cap. It's at $4 million market cap now. So got a, what is that? Like a 20 to 40X on that. And then a lot of these other projects as well too have done well. Whether you like it or love it, you got to learn from it. A lot of them are meme coins. And so if you miss Drop, if you miss Bear, if you miss Goat, even though over the next like month, who knows where these projects will be at? Maybe they'll be at 10 million, 20, 30, 40. We don't know. Nobody knows. But that's the fun part about crypto, is speculating. Obviously, all of these are based on the community and the marketing and who's created them. So do your due diligence, do your own research. But if you guys want to check it out, go through the link in the description below. One project someone shared with me is called Ripples. And this one, super small market cap, super high risk, obviously, $16,000 market cap. So this is one of the highest risk projects out there. Definitely don't buy it. Just look at it. Go check it out. Someone reached out to me on Telegram about this, saying that there's some big like XRP influencer on Twitter or something. They may or they may not be launching a Twitter account for it. I don't know. We'll see. But I did decide to accumulate a little bit of this. But I just see this as something for fun. If it goes to zero, I don't care. I only invest money in the markets, especially low cap stuff beneath $100 million market cap, let alone 1 million, let alone 100,000, with money that I'm completely okay with losing, because it's either going to, 50x, 100x, 1000x, or it's going to go to zero. There's no in between with how I treat low market cap stuff. One thing I look for though, is I look for volume. So the 24-hour volume, I see what's breaking out and what has a lot of volume, and also what has relatively low market cap with a high amount of holders. So for example, the highest amount of volume that's come in has been on Drop, and that has been over the past 24 hours, 1.49 million XRP. The second largest one is Derp. This has a 75K market cap. So I would look into this one because the holders, 401 holders, it's growing, still under 100K market cap. The total value locked is 10K. That's larger than some of these other ones. Like this one has 14K total value locked with 288K market cap. So I would actually click into this one, and I'm just discovering this live right here. So I don't even know what this project is. I don't know who's behind it. I just refreshed the page and it's showing up right here. And so it looks like this project rallied up really quick on the 24th of October. It's currently in a downtrend right now. And so technical analysis on a lot of these lower market cap stuff is irrelevant, but it does form somewhat similar psychological patterns that we see right here. So this is in some type of falling wedge right here. So I would expect this project to find a bottom and to bottom out down here, depending on who's behind this project. And if they do some type of marketing push, maybe they make a bunch of Twitter posts, maybe they reach out to some people, then it would need to see a break of this descending resistance and a break of a previous level to form a new uptrend. And that's usually what we see happen with these projects. They launch, they rally up, and then they see a massive dump off from people who got in at like 100 XRP market cap to 50,000. They take profits, it bottoms out, and then new people come in, enter through new marketing, whether it be through their Twitter account or anything like that, or Telegram groups. So if we go to the Twitter, it says Derp is for Derps, Supreme Meme Collector. So obviously completely degenerate. I don't know who's behind this. Maybe I would message their account and see who's the creator of this, what their game plan is, and all that good stuff. So definitely don't buy this just because I'm showing you guys this. I'm just giving you an example of what I look for. The first thing that I look for is volume. I also look for liquidity. The only issue that I see with First Ledger is a lot of these projects have super low liquidity. That's why it's extremely volatile. And so because anyone in everyone can come on here and launch a token with no liquidity. It is going to have a higher failure rate in a lot of these projects compared to other chains, but it also lowers the barrier of entry for anyone to come in and launch something within like 10 seconds. So you have to get a lot better at filtering between what projects are actually going to succeed and which projects aren't. And the best way to do that is by going to bullrunners.com to take your knowledge and your portfolio to the next level. That way you can get our top-notch education on how to discover the next 10x, 100x, 500x, or 1000x altcoin pick, and also get first access to our top altcoin picks before we post them in our Telegram group with over 12,000 people, send out to our email list of over 50,000 investors, and then make YouTube videos about them in front of 300,000 people. Again, we're not telling you to buy them. We just show you what we're seeing, and you're going to get access to market analysis, early access to our crypto education platform, and our inner circle by joining the early bird list. You just have to click the button on the page, bullrunners.com. It says, yes, reserve my spot on the list. Put in your best email address. You'll be instantly subscribed to our daily video newsletter, get value-based videos like this, join our Telegram group of over 12,000 people, and we will keep you in the know and notify you first. So I appreciate you guys for watching this video. Give it a like if you want to see more content like this. I'll see you on bullrunners.com. As always, you know what to do. Stay bullish.